Well, it's been well documented that Mario Draghi, who's the former president of the European Central Bank, came out and stated that the European Central Bank has reached the limits of monetary policy. So interest rates are negative 0.5%, their short-term interest rate. So what's the stimulative impact of cutting to 0.6%? Probably nothing. And it's to the point where they have bought basically all the new sovereign debt issuance across Europe. And it's gotten to the point where you have high-yield companies in Europe, so junk-rated companies that can issue debt at a negative interest rate. So if ever low interest rates were going to spur economic growth and activity, they would have found it by now. Right. They're so far beyond. So that's when you start to realize that monetary policy doesn't work well in a very high debt environment. Because what you're doing is you're trying to solve a debt problem by incentivizing everyone to take on more debt.
Right.
That's where the term pushing on a string comes in. Imagine, well, you pull the string, you can't push on it. So, and so that is the natural limit of monetary policy.
Right.
In the U.S., we're not there yet. That's why it's working here, it's not working there.
And when is that moment, like in the Roadrunner Coyote movies, where the coyote realizes that he's run way out over the cliff and there's no ground below?
I don't know exactly where that is, but we are on pace to find it, right? Eventually, if you just look at a chart of the federal funds rate since the 80s, what you'll see is a sequence of lower highs and lower lows. Every single economic cycle within that time period, the Fed is not able to raise rates as much as they were previously because there's too much debt and the negative impact of that is too strong, and they have to cut rates lower than they did previously because there's too much debt. And as long as the amount of debt in the economy keeps growing and we're at a record level of corporate debt to GDP, we're going to find the limit. It's sort of in everybody's best interest in terms of corporations, the Fed, and politicians to find that limit. And they found it in Europe. It seems like they found it in Japan. And it's tough to imagine a scenario where we don't eventually find it here.